Had to go live just a touch early tonight, see if I can remember how to do this gig, to be quite honest with you. Take this opportunity to welcome each and everybody to the Friday live stream Independent Investor Channel. Those of you guys who are new to the channel or catching this after the live stream, we do this every Friday at 9 o'clock. We roll for about an hour. That provides some opportunity for some individuals that maybe frequent the Facebook group or catch me on Instagram to come in and actually engage a little bit with this community, as well as myself. I've actually taken a little bit of pause on the channel this week and hit the reset button. I do that every now and then, and rightfully so. I do that for my own personal sanity. I've been doing this a little while, and I know exactly how to pace myself a little bit, but I do want to take this opportunity to thank the group in here that is helping to churn this conversation. I can't thank you enough, but I think this week was really, really great for me. I actually returned back to my regular job, which was actually kind of nice, to be honest with you. But looking forward to the live stream tonight nonetheless. It's great to see a lot of familiar faces. I've got a few in here that are actually fairly new to the Independent Investor Channel live stream. And if you guys noticed, the forum has changed to touch tonight. I decided to deliver this live stream myself. Super, super important for me to do this every now and then. I may bring back the product through StreamYard and provide that from a collaborative opportunity. But what ends up happening is there's a lot that builds up on the channel that I want to actually address the audience directly. And this live stream is not only about bringing together a core group of not only content creators, but a subscriber base, but also to bring the focus back to where I think it needs to be, and that is on the subscriber. There's no doubt about it. I get this validation all the time through the channel. I have people come on and they thank me. I've had a few people hit me up on the Zoom meeting, actually, which is going quite well. I had a great meeting this week with the Inked Investor, who I will provide a shout out. Connor was nice enough to come on and meet with me, I think on Tuesday. Just an awesome, awesome person, no doubt about it. And, his investing strategy and his ideas about investing and his philosophies are going to be really, really fun to roll out. And I'm really excited. I remember when I told him that night, and starting a YouTube channel isn't for everybody. I think if you've got something to say, and I think you've got something to say, you'll absolutely get my endorsement. No doubt about it. And I'm glad to support great folks like Connor, a ton of other folks in the community here who I've supported over the years anyway, and probably too many to name, honestly. I've got about an hour to jump in the live stream, but it's great to see the familiar faces. JMAC Investing, some of these folks, Rebecca as well, who's probably going to be in and out of the live stream, certainly, but absolutely on the front lines. And I just want to speak about the devotion a little bit. It's amazing to me how some of these folks that are channel creators are taking their time to come in and spend a few moments, even just to say hi on the live stream. It means the world to me, and it really helps to churn the discussion. And again, look at all this expertise that's making their way in. I've seen some thresholds that are being met or being stared down. If you're a channel creator and you're an investor that I consider somewhat of an evolving investor or an established investor, there's a few in the group here, passive income investors in the group. I know Matt Money as well in the group, and Gen X dividend investor, who I absolutely shout out. I see David Oldenburg as well, who I had the pleasure of sitting in on a rent or buy type of town hall debate this week. So that product I've posted to the Facebook group, and that's spurred up a fairly lively discussion. I know David appreciates my unique experience on that, as I've been a homeowner, a landlord, and now I'm a renter. So I can speak about all of the above, but doing a pretty good job, I think, as far as trying to spread the message out a little bit and discover some new ways of delivering the content this week incepted my first opportunity with podcast. I did drop the link in there. If the thread is moving too fast and you can't catch up with it, I'd give myself a little plug there as well. I've actually attached that to the homepage of the Independent Investor channel on YouTube. I would love for you guys to kick over there because I think that is going to be one of those crafts and niches that I really resonate with. There can be just a couple words like stuck in a rut or motivation for the masses that I can sit down and roll on a 29-minute and 50-second podcast with no problem. And I'm not looking to fill airtime. I'm not. It really does feed my desire to get the focus of the message, at least from my perspective, where I want it to be. I want people to come to the message, and I want people to have an opportunity to consume content the way that they want. I'm very, very encouraged as well that more people are actually subscribing to that type of content, and it never really struck me as being a viable option in that way. And I was out actually running, Dave, when I got your podcast, but Dave just started his this week as well. As far as the channel creators in the group, these guys are all really trying to branch out. I see both of the channels in here from the two brothers, Matt and Kyle. So they got the passive income educator. They should be coming on as well. That will be a standard ops. Okay. We're going to take that 10 o'clock hour and continue on the discussion as well for you guys. Me personally, I will kind of exit stage right because that has really helped me look forward to this 1 hour and making sure that it's high energy, it's high charged, and I'm able to touch on a lot of the topics that I want to touch on. Okay. In closing, with regard to the folks in the group tonight, the thresholds that I'm seeing that are being made are pretty awesome. It's just great to see some of these investors evolve over time, and new investors that come in need to understand that I really do break down investing in 3 categories. Okay. The first being a beginning investor, the second being an evolving investor, and the third being an established investor. Okay. So I would consider somebody like a Gen X dividend investor an established investor. Somebody like Matt an established investor. I would consider somebody of my investing experience to be more of an evolving investor. I would consider somebody like JMAC Investing more of an evolving investor. But I think we want to make sure that we're also focusing the message on those beginning investors who are hitting me up via email like no tomorrow, man. They're hitting me up through the Facebook group. There's so many people out there who are like, how many ETFs do I buy? What ETFs do I buy? How do I start? And it's really, really encouraging to hear that level of dialogue. But I really would encourage those beginning investors to try to seek focus. Try to seek focus, man. That's what I'm trying to do for you guys in this 1 hour discussion, because in investing, you have to be focused. It's not going to work for you if you're tuning into my channel or Kyle's channel or Matt's or Gen X's and you're saying, I can do that. I can duplicate that overnight and expect that it's going to make sense for you. You are going to have to want to do this. You're going to have to want to do it. All right. Now, if you don't want to do it, or you're going to try to circumvent the road of evolving as an investor, I would encourage you to just move on and do something different with your time. Okay. Investing is one of those things that you really have to resonate with. You have to understand that you are going to take stocks into a downturn. You're going to make what you consider mistakes. You're going to over lever. You're going to under lever. You know, where you should have zigged, you end up zagging, and it happens, right? And you have to be willing to understand that the stock market is humbling, okay? And it is what it is, but don't let it consume you, okay? It's not worth it at all. And this community really goes to bat behind the scenes, to be honest with you, to make sure you guys are provided some real testimonials on how we go about making sense of this investing opportunity. Having a great discussion with Bob Wright in the group, who's been with me for quite some many almost a year now, I think, ever since I've been doing the live streams anyway. And I picked up on some of the pulse anyway. Was a little frustrated with some of the, returns on some of the single stock, Microsoft, etc. That may be true. You're sensing what everybody else is kind of sensing in the market every now and then. But I tell you what, when you take a step back and you say, you know what, it's just investing. Am I trying to think Pepsi to the moon here? Or am I looking at this thing wrong? Is Pepsi actually doing its job as it's marching toward its quarterly dividend? So I think you always want to take a step back. And I think the stock market can be extremely consuming, okay? In that if you're not careful, it can really grab a hold of you and it can really, really become addicting. I know it's a rush when you make money. I get it. I understand the psychology of the endorphins that kick in when you make some money and you make a good trade or you make a good investment. You really, really need to try to find your center, find your focus. And for the beginning investors, I really hope you hear me out on this. For some of the evolving investors in the group here, you will not hear me apologize for success. You will not. Okay. I will come on, give a high five to somebody like a JMAC Investing who's staring down $50,000 total invested capital. That's just incredible to say it like that, because I can remember when he was at 25, he's probably shaking his head like, yep, Ryan, I remember that too. And he hasn't been doing this long. But from a wealth builder's perspective, that should just be one of many examples of someone who is achieving those levels. Now, from my perspective, again, I'm not going to give you credit for falling over the finish line. I'm not going to do that. It's time to up the bar, right? So the bar for somebody like a JMAC Investing is 100 grand. And I say it with a straight face. And I do not shy away from pursuing success. I don't. And I would expect each and every one of you guys in the group as well to not fear success, man. It's going to happen if you believe that it's going to happen. And it's not going to happen if you just think that you can trip and fall into the stock market and then turn a 180 away from it and walk away. It really does have to be a mindset. It really does. And the stock market can really, really help on the mathematics and the compounding of your money and a drop point where you can enjoy capital accumulation, dividend investments, multiple ways of leveraging the stock market to really get the most out of it. But I can tell you what, man, if you're not engaged in your program, it may not happen for you. It may not. And I say that tongue in cheek, man. There's a lot of people out there that really want to get investing and they'll do exactly what I just said not to do, and they'll succeed. There's no doubt, man. The stock market is a very, very powerful wealth generating engine, honestly. And some people will come into this group and they'll trip and fall into a Gen X portfolio, or they'll hear something that Kyle says or myself or Matt. And it's like, wow, that's incredible. I want to do that too. Or Jason as well, who kind of probably, I was thinking before I came on the live stream, who in the group is more aligned with my investing philosophy? Kind of a cool trivia, actually. And I think my answers will probably surprise you, but I came up with three. JMAC Investing, okay, and there's a very simple reason for that. Value investor, dividend investor, not afraid to take a little risk. I think he's kind of dabbling in that style right now, which is great to see, branching out. And for whatever reason, I don't know if it's just because he's resonated with the idea of diversification, has made a concerted effort to seek that out in the portfolio. The next would be Matt Money, for sure. Not necessarily where it comes down to the individual holdings, but the words that come out of Matt's mouth. That's what I resonate with. And I've told him this. I think if you pay attention to the answers that Matt gives when he's doing uh, help and assistance, he's answering questions. I always find it ironic how he's answering the question, not necessarily from his perspective, but he's really trying to reach and provide that perspective of what is good for the individual he's talking to. And I think that takes some maturity. I really do. Not everybody needs to hear, here's my way and take it or leave it, right? My way is the best way and your way is not any good. Don't listen to that person because they don't know what they're talking about. See, none of that really is important. None of it. If you can sit back and objectively catch a message like myself or any of these other savvy investors as well, and even some of these great subscribers in the group, man, they're really, really solid and they're cutting their teeth and they're getting their feet wet in the market. I think there's a lot of stories there to be told. I think the last investor that I'm probably the most alike, no doubt about it, is Gen X. And it's probably one of those things to where when I move out of an evolving investor and become more of an established investor, I think that's probably the style that I will probably gravitate to. Now, my portfolio will not look like Gen X's. No way. There's way too much acknowledgement for me on the passive investor side of the house. Gen X chooses not to do that. His portfolio is centric to stock investing. I will never do that. I won't. I've learned way too much in my life, and right, wrong, or indifferent, that's just my style. And it makes sense for me to always get through those passive assets in the portfolio, man. I've watched them through this downturn, and I am an absolute believer. Remember, I used to have those diversified assets tied up in mutual funds. And even with mutual funds, you can kind of see how the magic really happens in volatility. And you don't invest in mutual funds and ETFs to outpace the market. That's not why you do it. You do it to defensive posture and layer up in the portfolio. Super, super important. And it's one of those things that I absolutely insist on for myself. Absolutely. But I've had a lot of new investors come to me and they're like, how many ETFs do I need? Should I start with the S&P 500? When you have a blank palette to start from, you got to kind of sit back and say, what's the biggest bang for my buck that I can get entering into the market? Because I don't own anything. Okay. And a lot of new investors want to come to me. And I understand, man. If you listen to me, I'll make you hungry. Okay. I understand. And again, no problem. No problem. If you're a beginning investor, man, we're going to give you the tools that you need to become successful. No doubt about it. And if you look at somebody like a Jason who started with 25,000, it seemed like seemingly a year ago. Freaking A, right. Jesus, what else do you need? What else do you need? If you've paid any, now I don't get on here and blah, blah, blah about my portfolio, but if you've paid attention enough, or you've paid attention to Gen X and Matt and passive income investor, some of these folks that are established, it ought to be a testimonial, one after the next, after the next, after the next, to kind of let you know that this gig is in fact scalable. No doubt about it. Very, very powerful. I really want to make sure that the inked investor is provided a proper shout out. I would imagine that the channel is up and running, and I'm kind of taking a stab at that. Would ask as a personal favor if you guys would kick over and help support Connor. I will be doing it at the end of the live stream. I just think the world of Connor, and certainly Connor's going to be part of the group evolving. As we grow this group and we grow the community again, he'll be in that upper echelon of expectation as far as I'm concerned, again, achieving success. Because it's not one of those things, man, that you're going to come to me and be like, hey, I got this, I'm an awesome investor. No, man, I just expect that of you. No more, no less. Okay. So be an advocate of that power. Be an advocate. Okay. Because there's people who are watching. There's no doubt about it. So I really appreciate everybody making their way into the Independent Investor live stream tonight. Certainly, man, I want to make this a little bit more engaging with the community. I kind of pulled away a little bit from that, and I do apologize. But I had some really, really good discussions. I will be linking the podcast probably over to Twitter. So if you guys don't follow me there, The Instagram following is certainly worth it, man. That's kind of a personal opportunity to come and get to know me. I do that because it's important to me. Okay. I was just having a discussion with David and I openly admitted, man, I don't have the time to go and spend my life on social media. As a matter of fact, I am the opposite. I don't do that. I am an introvert. For those folks that follow personality types, okay, this is like what I'm not supposed to be doing. Okay, so coming on and sharing my story online is something that I enjoy doing, but I don't really spend a lot of time consuming a lot of content on YouTube. However, with that said, I was just telling Connor this week, I can throw out the opportunity to offer Zoom meetings to people with the expectation that very, very few people will even take me up on that offer. And that is the irony in that is amazing to me. When I talk about you have to want this opportunity, you really do. I can't tell you. And motivation for me, yeah, certainly. I have it to give. There's been many, many nights where my motivation keeps me up because I'm just so happy and so hungry with life. And I want the best out of all of you guys. I want the best David Oldenburg. I want the best Gen X dividend investor. And I think there's probably a reason why I look forward to coming into this live stream every Friday, because I'm also looking to make the best Ryan that I possibly can. And exponentially, that's happening. No doubt about it. Man, my interaction with some of you guys and giving some of your ideas to me is absolutely second to none, man. I got Castro says I'm a beginner and just bought 120 VTI shares. That's certainly an aggressive stab at the VTI, no doubt about it. But if you're going to trip and fall into a big block of shares, I think the VTI is the right one. Obviously, I'm answering this question tongue in cheek because I don't know your tolerance to the market. I mean, it's run off the bottom pretty quick. You bought diversification, you bought the entire market. You could own that one ETF the rest of your life. So I like the aggressive play. I really do. I obviously am a big fan of VTI. I own it for my kids. My kids own it in the custodial accounts. I thought it was good enough to invest for my kids. But I own enough of VOO right now. I've got a 100 share block of VOO. I'm good with that. And I own a 242 share block of VYM in my account. So a little more dividend centric in mine. And both of those I've supplemented with some international holdings, the emerging markets as well as the international dividend payer, right? So European exposure in the other account to supplement the VOO holding, as well as the small cap growth ETF with Vanguard. So I currently don't own a big block of VTI, but freaking congratulations. That's pretty awesome, for you to come on to social media and share that big share purchase with everybody. I mean, that's not small potatoes. 15 grand on that purchase, 16, 17,000. Yeah. That's not small potatoes, man. But again, I don't mind talking large numbers. The word million doesn't scare me. Neither does the word billion or trillion. Those are just words to me. That's fine. But when I'm talking about tens of thousands of dollars with new investors, that's the biggest bridge, a gap in your mind that you've got to get over, man, because there's so many people out there that will fail to get to that first $1,000. Okay. I just talked about this on the podcast this week, how those barriers to entry are really, really too much to overcome for a lot of people. And kudos to you, man. 120, that's rocking. That's about as established a base as I've ever seen. If you guys are in the chat, man, and you're enjoying the live stream, and hit the thumbs up. I guess it helps the algorithm. If you don't like it, don't hit the thumbs up. I really don't care, to be honest with you. But feel free to reach up there and do it. I don't look up there very often. That's why. I'm just trying to deliver the best product I possibly can in the 60 minutes that I have to deliver it. So, and you guys are a big part of it. You really, really are. And thank you for the opportunity, man. Everybody breaking those investment goals, man. I've got Hidden Freedom Investing in the group here. So Dave's just another one of those portfolio builders, and again as well, dabbles in a lot of different things: stock, options, real estate. Just glad to have him as part of the community, and quite frankly, I'm just happy he lets me hang out with him, to be honest with you. He's just the coolest guy, man, and he's freaking funny, which is great, man. I'm kind of envious because I wish I was that funny. But he says everybody's breaking those investing goals. Yeah, but the funny thing about that, man, is you can't really get complacent on that. That's the key. My goal for starting my brokerage account, man, it's just been on fire. Boeing has really helped with the swing trades, but I've really had a good run here, getting that account up, and it's $9,000 away from 100 on the third account. So I'm super stoked. We're at 91,000 there. The market didn't really help today, but we'll get there, no doubt. Just got to get over that hump a little bit. And then we're off to the races. I got to get all three accounts kind of back up above that six-figure mark. And we will, no doubt. I don't get surprised by success anymore. I would encourage each and every one of you guys to take that page out of my playbook, okay? Don't hope. Don't hope. Expect. All right? Expect it. And I love to see that, man. I really do. I celebrate that success for sure, because those successes, man, when you hit that first 10 and 25 and 50 grand, those are the big ones. Those are the big ones, because you're moving away from zero. You're getting up into a category that will set you apart. Okay. I just had one of my subscribers hit me up through Instagram, and she showed me her credit score, 800. That puts you into the top 80, 90th percentile of people who have taken a concerted effort to control their credit. And that's huge, just huge. So I absolutely want to acknowledge those successes when they happen, especially when you're getting off the launching pad. And getting off the launching pad is 0 to 1,000. Okay, getting to 50 grand, that's not launch pad. That's big baller style right there. 40% of everybody who is getting into or approaching retirement age from 50 to 59, 40%, which is awful close to 50% in this country, have less than $50,000 saved for retirement. So think about that just for a second. Now, if you guys are some of those subscribers out there that maybe you're like, good grief, Ryan, I'm one of those people. Think about this. I'll be your biggest champion. I really will, because if you gave me 50 grand or 25 or 10 or 5 in retirement, I would be just fine. I would be just fine. It really comes down to perspective and how happy you are with everything else in your life, honestly. But I just think that speaks to the lack of concerted effort throughout the course of your life to really, really be as aggressive as you can. Now, there are hard times, there are hardships, there are unexpected expenditures that do come up. I totally understand that. But 40%, guys, for something that I am living proof of somebody who's gone through and done most everything wrong, and am still knocking on the door to a $500,000. It's unacceptable for anybody not to do it if I, in fact, can do it. It's unacceptable. Take it from me. Okay. I tell you where I started from. I didn't come from any type of, I didn't get a little $50,000 head start. I didn't get any of that, man. I started from zero. As a matter of fact, I started in hock with the IRS, not once, but twice. All right. Crawled my way out of it, had to hire a tax attorney. Lots of fun stuff in your life, man. Stuff that you just wouldn't get to learn any other way unless you went through it yourself. It's so lovely. And I'm here to share it with all of you guys, man. All of my deficiencies. But I get to share some of the successes too, but I guess that's part of the fun of it anyway, man. So really cool stuff. He says, I'm not a talker, no gift of gab. What are you saying, Dave? He's making another joke. I know. I had somebody come on and they were like, man, I watched your live stream and you didn't say anything in the first 12 minutes. I was like, man, thanks a lot. I appreciate that. I'm pretty sure there was words coming out my mouth, and I'm pretty sure they were English words, but whatever. Can't You can't keep everybody happy. That's for sure, man. It's got 29 minutes into the stream, man. I certainly want to offer some portfolio perspectives, moves I'm making. I have 4 stock picks that I've entered into. These might surprise you. They might not. It's probably not going to surprise some of the value investors, certainly, but the defense sector, absolutely. Lockheed Martin, biggest company that I regret selling, actually. But I've been looking at Lockheed for a long time. Don't really feel like I got the greatest entry. I think the value is there. I didn't have any problem. Obviously, I pulled the trigger on the shares. But Lockheed Martin, and then also in the defense sector, General Dynamics. Now it was between Northrop and General. Between those two, I was super stoked to get GD right here, trading at 11 times. Government contracts, man, solid. A lot of the stuffs that we know about as far as the inner workings of how they make their revenue, they are the go-to as far as making our military equipment. I don't want to say too much, but I own a piece of the company, and I'm glad to have it. AT&T, we did a strategic move, so I based it 28. I did take some profit in the broker account and took that profit, rolled it to cash, and then actually put 115 share block of AT&T back in the Roth. Okay, so I actually did some strategic repositioning in the portfolio. Once you guys kind of get up to some bigger amounts and you manage your portfolio in the way that I do, Gen X is probably sitting back and he's probably like, okay, Ryan, this doesn't apply to me. No, it doesn't. It really doesn't. But I may take a selling move in the portfolio with no real acknowledgement about how good or bad the company's doing. In other words, I may not even want to sell the stocks, but I do it to lighten up on a particular sector. Okay. And, Jason's probably a few years from understanding kind of what I'm talking about. Like, you'll invest in a company, it'll run up and throw the portfolio a little bit out of whack a little bit. And taking those profits helps you kind of reposition a little bit in the portfolio and make sure that it doesn't become top heavy. And I just felt like industrials, energy's next to go, right? So energy is next in line. Financials took a huge run up. I mean, Goldman Sachs was trading like a penny stock this week. I'm not really sure what the heck that was going on there. JP took a nice run up, so good for Matt. I know he's got a good base. He'll hold those shares for sure. Book value is 115 on JPM, right? So, financials, I mean, we were barking for a long time, guys. Kind of a shooting fish in a barrel. I think there was a lot of dialogue about tech, and technology is my favorite sector, guys. But you kind of got to be careful a little bit when you're sitting there saying, well, tech is, the gospel church of all things. Let's all come in and worship technology. Up 59% in the sector. You're seeing a little bit of rotation happen, and I think tech will be fine long term. I get it, but these short term rotations, man, are something to be expected, right? So we just need to make sure that we're also looking at value as well. And I think right now, energy looks good to me right here. So we'll kind of see what happens. I've owned energy all the way through this downturn, and I haven't missed a beat one bit. But ExxonMobil at 45, and I don't know where Chevron settled out today. But if you're just looking to take a small dab and a small crack at energy right here, great dividends, great balance sheets. They do great things. They are not just an oil company. Okay, hello. Take a look and see for yourself. These are two of the best, well-run energy companies in the world. And I'm glad to own them. They're easy to own as far as I'm concerned, especially at these valuations, man. I mean, I was buying Exxon in the 70s, in the 60s. Now here it is at 45, just waving and saying hello to the group. That's all I'm saying. But those 3 sectors, man, industrials, financials, and energy, I understand the technology thing. I get it. I really do. I've seen some of these high growth stuff, and I own them all. Facebook, Google, Amazon. Wouldn't have it any other way, man. The portfolio seems naked without these stocks. Absolutely love them, but I'm going to wait for a pullback to get my block shares in. on Amazon, Google, and probably Facebook too. I may never be provided that opportunity in those higher growth names. That's fine. I think deploying some patience while I own the smaller pieces in the growth portfolio, which is on freaking fire. I just cannot complain. That's another strategy that I didn't declare to you guys, is the M1 Spider portfolio doing quite well, up 850 in that. The M1 Finance Growth portfolio up 1400 in that. That's just with those partial shares, man. So kind of cool stuff. And then the First Trade account, obviously, I fund that using the YouTube earnings, whatever. That's just what I do. So got that DCA flow in there every month. And then finally my TSP, which I make 10% contributions to that. So the element of what I just said there for new investors is to understand that it's not all about looking at, like the one comment I had with the 120 shares of VTI, right? Now it's what you do with it. Now you've got that block. Now, what are you going to do on a monthly basis? Can you DCA those shares? Are you going to set it up for dividend reinvestment? Things like that. What other investment accounts do you have that you have the ability to still contribute to, just in case we go back into another downturn, right? You always have to think like that. The final stock from a smaller perspective, I did more positioning moves in the portfolio, but WP Carey is one that I picked up from Matt Money as well. Looked at it, loved it. Now, my larger position is with Realty Income for good reason. But I liked what I saw with WP, $10 billion of market cap, so a little bit smaller quarterly dividend, nice healthy dividend, but it fit a nice spot within the Roth. And part of that strategic repositioning was to continue to hold the shares in the taxable on O, which I don't like. I get it. I'm well aware. Gen X is like, what are you doing, Ryan? But I have some ideas about really taking that into an investment posture, letting it grow and accumulate. Dude, that monthly dividend is legit. It's legit. What can I say, man? Can't say that I've ever really experienced that monthly dividend. And it's like, dude, I get paid a monthly dividend, and then I turn around and it's like I have another one. And it's like, whoa, freaking A, man, I'm not used to that. So it's nice to have the two AAA net lease companies, the two big ones that I really liked. Just 35 shares of WP. I've got 250 shares of O Realty, 100 share block in the Roth, 150 share block in the taxable account, which has been compounding really, really nice over time. It's great to see that position blossom. So that right there, in essence, is the stock moves. Not a whole lot, not getting a whole real crazy, not quite as crazy. I mean, I could sit you here and bore you about all the Boeing trades. Boeing, we're up to 10.5 on trading profit with Boeing. I've had that thing dialed in. I've got somewhat lucky, but I don't know. Is it luck? I'm not really sure. I don't really care. Doesn't really care. I took some heat for buying the shares where I did. Probably would have got even more heat for selling the shares where I did, all 8 times. And I'm on investment number 9. So we'll see. We'll chronicle the Boeing trade. From a technical perspective, it was like a no-brainer. From a fundamental perspective, there was none. I mean, it was really just a matchup of assets versus potential income and really bridging the gap for a year. That's really what it was. But at the end of the day, you really have to just set back and say, is the company going to be around next year? And my answer was yes. So I'm going to scroll down here, see if I can get some more comments out of the group. Still dragging my knuckles. So Randy with Retire with Options as well. Great to see you guys. I would spend the entire hour calling you guys out, so I do apologize if I missed you. And Ethos Investing as well, who's been great, man. I've had some cool conversations over Instagram with Ethos as well. It's going to be great to see you evolve in your mission as well, and get yourself I mean, you could be a multimillionaire for all I know. I don't know. Maybe you're a starting investor. I really don't know that either, but it's great to have you in the group nonetheless. Very cool. No gig of gab here either. Yep. Top notch. Hey, could somebody drop a link to the Facebook group? If somebody would do that, Rebecca, I do put that on the front page of the YouTube channel as well. It is the only Facebook icon that I put there. I don't even link up the page anymore. That's just a repository for the shares for the YouTube videos. So that's just an easy place for you to go at your leisure and kick over to the Facebook group, and I'll get you in. I'm declining a lot of requests to go in there. If I see cryptocurrency in your profile, you get an automatic declination, and you can call me what you will. I don't really care. I just do not have time to deal with that garbage. I don't. If they want to sell cryptocurrency subscriptions, they can start their own group. It's that simple. Okay. Until you learn to enjoy the downturn, you're a novice. That's a really smart comment from one of those investors that I hold in high regard. So I'm talking about passive income investor. I'm not saying you have to have fun, but I think it probably benefits everybody to expect that at some time you're going to enter into a downturn. Okay. I just am talking to way too many investors that are seemingly freaking afraid to take a position into a downturn. Okay. Now, nobody wants that. Let's just set that aside. But if you're looking to pick that perfect bottom, man, you need to recalibrate your approach to this deal. You really do, because it's just not going to happen for you. You're going to put a little bit of capital to work, and it's going to take a little hiccup on you, and you're going to freak yourself out, and you're out. It's just not about that. It's about whatever starting amount you have entering into the market with some level of scale. If you have 1,000, put 200 in. Okay. That's the scale mentality that we're talking about. If you've saved up and you've got 5,000 and you want to scale into the market, there you've got a nice $1,000 starting position. Maybe you're like, Ryan, I got this thing licked. Okay, do the whole $5,000. I'm good. No problem. I'm not telling you not to. I'm just telling you, you need to be prepared no matter what amount you are looking to start with. Super important, smart comment. I like it. Thanks, Kyle. Appreciate. VTI or VU is a good place to start. They're good ETFs. I get it. And again, this is not the church of VTI. Okay. You hear me say this all the time, but there's a reason why it dominates a lot of the conversation. It's because I have a very acknowledged responsibility to understand and acknowledge that somebody who's listening to me might actually take what I say and deploy it. Okay. So if somebody is looking to enter into the market for the first time and they don't have any clue about where to enter into, what are the positives of those ETFs? Low fee, diversified, pay a dividend. VTI gives you exposure to really all three capital classes. Okay, small cap, mid cap, large cap. Right. So it buys you the stock market, the total stock market for the U.S. So if you're going to come on and you don't know squat about investing and you're like, dang, Ryan, this is cool, man. I looked into this. You're right, man. 0.03. This is awesome. Compared to my old mutual fund with American funds, this blows it out of the water. Yeah, it sure does. It beats 90% of any comparable product out there. So again, I would go out on a limb and say that I probably know more than most beginning investors when it comes to investing. All right. I'm not arrogant. I'm just saying I probably know more than the average beginning investor. Okay. So if you come to the channel again and you're looking at these products, it's going to give you the biggest bang for your buck. That's it. And I do acknowledge, man. That's why you don't hear a lot of language out of me like, oh my God, this stock is on fire, buy it. You don't really hear that a lot. If I feel like a stock is a good entry, like AT&T right here at 30, AT&T at 30 is a good entry. Okay, that's this. It's my opinion, yeah, but the technicals back it up for sure. The fundamentals, yeah, they've got a few dark spots certainly. But I would have bought the stock at 40. right? Here it is. It flirted with 28 at AT&T, got a good. Now, it doesn't mean Kyle's probably laughing at me like I'm not buying AT&T. I know you're not, brother. It's good. But for somebody out there who's looking to grab some telecom exposure in communication services, right? Take a look see. Verizon blew it out of the charts today, man. And for those of you guys who bought old tech today, Dinah JMAC Investing's probably loving me for his. I think he bought Cisco. I hope he did. I know he bought Intel, but I hope he bought Cisco as well. He's probably like, yeah, Ryan, I got that covered, man. I'm good. Good. He knows what I'm talking about, man. It's up a couple bits today. Cisco, you bet. Mr. Robbins, you bet. It's awesome. Well-run company, man. Good stuff. And not every stock idea that we generate in this group needs to go in every portfolio. Okay. It's going to take time, but Jason, who's starting to come into a nice sized portfolio, Kyle, some of these guys, Matt's in a little different camp, right? With, $400,000 or $500,000. Now you can really you can do some cool stuff. And he thinks like that. That's really, really good. If you can generate capital from less capital, that's the whole idea. But it's really fun to get to that point where you can just kind of buy what you want. It's a good thing. It's a good thing, man. It's success. And again, we're not going to shy away from it, man. We're gonna run as hard as we can toward it. That's the whole idea. You wouldn't believe how many UMMs I edit out of my video. I don't think I've said yet tonight. Well, I just did, but I'm pretty good. I usually say okay or like. It takes a little practice. It's all good. You have to take a concerted effort to not say and like some people are crazy, man, like that. And if somebody brings it to your attention and they're like, listen to how many times it's crazy. But anyway, shooting live streams aren't any, but we're within like 14 minutes, guys, at closing down. Certainly these guys are welcome if they want to go ahead and start sharing the links to the next live stream. They certainly are welcome to do that. This will be the way that it rolls as far as my 9 o'clock start time. I don't have ownership over this. It works really well for me and the family. And I've kind of explained that to the powers that be that are looking to help the group provide an opportunity on a Friday evening to kick on and engage and gain a little bit more awareness to the market. So super, super important. I think we've covered most of the topics that I want. I got a couple more, but I want to get to some comments. Any opinions on ARC-G or ARC-W? So I would encourage you to ask that in the next live stream. So otherwise, I'd have to look it up for sure. I'll DM you. Good stuff. His SD photos were amazing. Good. Thanks, Dave. You guys are okay. I'm trying to find some actual investing questions. If you guys aren't talking about like bacon or chicken, it just wouldn't be the same group. That's for sure. So David says, so glad to hear you won't apologize for success, and well, I mean, so I look at David is successful, and there's some folks in here without quite the net worth, right? Like Rebecca, for example, is successful, no doubt. And she's probably like, oh, Ryan, she's probably with the client right now, but or with the patient, but success is relative. Okay. And it doesn't do a whole lot of good for me to come onto social media and say you're successful. What I want to do is press on the opportunity of maybe you looking in the mirror and saying, I'm successful. Okay. It's going to start you down a path of happiness that maybe you can't even appreciate. And I know there's people that come in here that do not comment or that will catch this live stream and they don't give two squats about investing, man. They just want to hear a little bit of encouragement, motivation, etc. Especially with what's going on this week, man. Saddens me that people can't take more personal responsibility for their actions, because at the end of the day, like investing, like your family relationships, your personal relationships, your financial relationships, your dietary choices, your exercise choices, you have to take responsibility for all things in your life. You have to. That's just the way it is, man. All right. Join request sent. Just make sure those, I got the admins in the group. I've got Jared Odell in the group here, and I make sure you let her in. She's good. We've had our filter on pretty tight, man. No doubt about it. It's been pretty dirty, but I think we've cleaned it up pretty well. A marathon, not a sprint. So Kyle's full of smart comments tonight, man. I like that. He's a young, smart kid who's got really, it's a unique perspective at his age. It's really cool, man. And hopefully, that message is transcending with the masses, because I just think more people need to get excited about investing and certainly looking at it for the long term. It is easy to get caught up in the short term. You'll find me do that reset and re-perspective check when I start to get a little bit consumed, because I will. I love my craft. I love it. Just like guitar players get consumed in their craft, I really can get consumed in this investing thing, because I just love it. I love teaching it. I love podcasting about it. The Facebook group is cool. It's really cool. There's a lot of posts in there from people that are just sharing information. That's interesting enough. But at its core, I really enjoy breaking down someone's needs and how we can potentially fill those needs and make it make sense to them. That really is the key to me in getting into the weeds as far as investing. Your mindset, well said. Thank you. All good. I know all good is going to take that spiritual approach with me. Love it. It's good stuff, man. Probably not bad for such a niche ETF. So you guys have kicked in some good ETFs for sure. I don't know if what's the expense ratio. So 0.75 on an ETF is pretty high. At the end of the day on an ETF, and I know me and Kyle have gone back and forth on this too. And I know, I don't know, I don't want to put words in his mouth, but he seems to me to be a little more heavy on the stock focus, and rightfully so as a young person. But you don't invest in an ETF to outperform. You don't. It's a defensive mechanism. So it's the complete opposite. I just think with ETF investing, you can kind of outthink yourself a little bit, and you might grab some sector exposure that's really outperformed and then enter into a rotation at the bad time, and financials and industrial start to outperform, maybe even energy. I mean, energy as a sector in my sector portfolio is positive right now. It's positive. So, and I've funded it through this downturn. So, it's never as easy as you think it is, just investing in the next best thing. It's never as easy as just jumping and putting your coattails on the hottest thing out there, because on a dime it can switch on you. It really can, and it will. I've seen it many times. The stock market is never ever that easily predictable, ever. When you think you got it licked, it'll do a 180 on you. It really will. That's why you got to kind of diversify and own as much as you can. Spread it through. Thanks, passive investor. I'm old. Got to hit it harder than you young bucks. I don't know, man. I guess those long-term goals of millions in retirement, I think that's all good. I got a feeling you'll be just fine. And who's to say that when you enter into retirement that you're even going to have to dabble and fall back on your retirement? You may want to continue to working a little bit in retirement. So to each his own. I think the idea is that you put yourself on a path and a plan, and you initiate that plan as hard as you possibly can. That way you look back over your life at that plan, and you've done everything that you can possibly do. And that in the end is going to be good enough. And I think most people who engage in investing, I know Jason hasn't been investing that long. And so to see that success that quickly, hopefully for Jason, I'm not Jason's eyes, but hopefully it's opened his eyes to the power of investing. And hopefully It has the same effect on him that it did on me and everybody else, in that it's like, wow, why didn't I do this sooner? You know, can I be more aggressive? And usually the answer is yes. And I'm not talking stupid aggressive. I'm saying, can I be more disciplined? That's a better word. Can I contribute more? Can we cut back on the budget? Can we try to work on our credit score? It really does start to form around your decisions that you're making. Do we need that date night sports car? I don't know, man. That's for you to answer. I don't know. Hey, don't mean to get involved if you guys are talking about getting that Mustang convertible for date night, but you don't need it. Come on. And if investing is as high a priority as I think it is for most of the group here, that's the real takeaway, is that it can't be something that is bottom tier priority and just something that, oh my God, this YouTuber keeps barking in my freaking ear and I'm just going to start to get him off my back because he's so aggressive and he's got enough passion for 10 YouTube subscribers, right? I'm just going to get, it doesn't really work that way. You got to want to do it. You really do. And it starts to become consuming. And I think he would agree with me that that personal validation about investing, no, you're not a perfect analyst. Neither am I. Is that necessary to succeed in the stock market? I think not. I think not. I think you can gain a general awareness to the stock market about investing in value and good growth companies, good ETFs with low expense, and do just fine in the market. Absolutely. Live to fight another day. I invest in 43 stock, which I am fine with. 43, that's a good amount. I mean, it just kind of comes down to your style. My passive side of the house allows me to dabble in my single stock. So you guys that do wish to daisy chain to the next, within the first 5 minutes, I'm going to kind of give a 5-minute announcement to the live stream before I sign off. But you guys are welcome to start sharing those links in there, and anybody who wants to kick over and help support our continued effort in the live stream, you guys are welcome to do that. But I'll start to close it out and just thank you guys for making your way in here. It's the fastest freaking hour. I may have to extend it back to 2 hours again. I don't know, man. Kind of tough on me, but at the same time, it was a move that had to happen. So I appreciate your latitude on that. Maybe I'm just copying what Ryan says. could be. I don't know. That's probably Matt hiding behind the passive income educator for sure. Those guys have got the 2 channels now. So appreciate their efforts there. Such a great community in here. It is, and it speaks to a different way of tackling the investment beast. I just think if you're a new frail investor at 19, what do you do? What do you do? Do you honestly think you're going to just read a book and you're going to fall into successes? I think we can get you to a place that you can probably not get to on your own if you come in and join this community. I really do. I think if you are truly, truly interested in this, which I draw up as a prerequisite to success in the stock market, this has to be higher on your priority list, man, than most people. That statistic that I threw out with regard to the 40% getting into retirement with 50 grand to retire to, if you're in that camp or you don't want to be in that camp, right? Start to make those decisions now. And it's not about the potential to fail by making those by making those decisions. It's really just the fear of failure down the line. Really, it's not about anything else other than, man, you just got to do it. You got to do it. And it really does. It provides that awareness and support, quite frankly, for a lot of new investors that want to come into the group and cut teeth with us. So really, really awesome group here. I mean, I got Ryan Schlosser for real. Thankfully, law enforcement is pretty nice. Pension, 70% of your 3 highest years. Absolutely. So, Ryan, you touch on an interesting point, and that really does set you apart. It allows you the opportunity to maybe layer up a little bit, maybe be a little more aggressive with maybe a dividend type of approach. But I think I think Matt would agree as well. I see Matt Money right above you as well. Never stop evolving as a stock market investor. Never. That's the thing that I love the most about investing is that you really can't ever stop evolving and recognizing those things. I mean, I recognized the DCA that I've done this month as part of my strategy. It takes no effort. I don't miss that money a bit, right? But it's super important to realize that you could actually layer up. I think those guys are probably started up on the next channel, guys. I'm actually at the bottom of the thread. I'm going to actually thank you guys. I was pretty fired up tonight. I don't know where the 60 minutes went, but it's helping me jam structure into the live stream on the Independent Investor channel, and I'm happy about that. I thank you guys for your flexibility. Really do encourage you guys to kick over and check out the podcast, man, and check out some of the other platforms as well that I'm putting out there. No expectations of becoming a social media guru, just an opportunity to maybe try myself a little bit and sow my creative oats a little bit. And I think podcasting is going to be something that I really enjoy. I enjoyed the first couple I've put down. I get in my zone, and hopefully folks can look to get in that zone with me on specific topics that I'm looking to cover, guys. So with that, I will wrap it up and kick over, help those guys support continued efforts on the rest of the stream. And we'll catch you next week on the next Friday live stream at 9 o'clock. Guys, be well, be safe, and we'll catch you next Friday. Take it easy, guys.